Good evening, traders. Welcome to the Sunday Open. I'm your host, Craig Shapiro, macro strategist here at NinjaTrader Live. It is August 2nd, 2026. I am back in the saddle after a week off traveling America in my RV. And what kind of market have you guys left me with? This is outrageous. There was a lot going on last week. There's a lot going on over the weekend as the president has once again served up tacos for dinner on Saturday, and then just now again, right before the open here on Sunday, when he says we are back into negotiations with Iran, and we have the war is off trade developing for us on this Sunday evening. Just a quick look at the tape, and then I'll introduce the panel. Not surprisingly, crude down 6.5%, back under $80 to 79 and change. Gold higher, stocks higher, dollar weaker, bonds up. It's a bit of the risk on rally. Got a great panel for you again on this Sunday late afternoon. Checking in from Lollapalooza on the sidelines there in Chicago is Pax, and both Farm and Blake from Arizona. How's everybody doing on this Sunday evening?
Great.
What's up, Craig?
Great.
What's up, guys?
Excellent.
I love how enthusiastic you always are, Blake. Even at 3 a.m, your time. Hey, what's up, Pax?
Market's open, baby. Time to rock and roll. Let's do it.
It's funny.
I mean, it's exciting world for Blake. Currencies are top of mind. Dollar yen is top of mind. The bond market has been getting destroyed. Yields have been moving higher. We had a very consequential Fed meeting last week where Warsh decided not to answer really any questions and said the market's going to do the work for the Fed in solving inflation. And the market said, cool, we'll do some work, and took yields up materially at the back end there, and led to some consternation in the equity markets, only to then get served up some pretty strong earnings from Microsoft and from Amazon. But then Apple said our earnings suck. Last week was wild. It was interesting to kind of watch it a bit from afar on the sidelines. I clearly missed a lot. But Blake, I want to just kick it over to you. Dollar yen has been kind of top of mind. The bond market's been top of mind here, as I mentioned. As you prepare for the week, what's the biggest thing that you're looking at here that you think is going to help dictate? It's also the first of the month trading starting tomorrow. We get a lot of macro data this week. We get the PMIs tomorrow, ISM tomorrow. We get non-farm payroll at the end of the week. We're going to hear a lot of Fed speak again this week. But how are you seeing things develop for the week ahead?
Well, so there's a lot there, and obviously the yen. Yen was really interesting because there was a coordinated effort between the U.S. and Japan buying a bunch of yen. Obviously, I'm going to say a lot of you probably saw the picture of Besant's desk that says "Buy JPY." It was so staged, it was silly. But the fact of the matter is that we've seen intervention between the U.S. and Japan, and that's obviously combating what we've seen in yields, because when we closed out the week, bonds are getting smashed. If you look at what's happening in the 10-year and 30-year yields, they're just ripping, right? They're just ripping higher into the end of the week. And typically what we would see is we would actually see dollar yen higher in a situation like this. But instead we had, obviously the yen had moved higher, and the yen had moved higher, the dollar yen had moved lower. And it kind of mixed up the currency market just a bit, but the currency market's really going to be focusing on, as you pointed out, we have a lot of key data this week, and there's not only just the non-farm payroll, we also have ISM. We get to actually view the manufacturing PMI or ISM, then we get the services ISM, and then also JOLTS and ADP and all the other economic data that's kind of lead us down the road on where we should be on the jobs report. But all of that has been it's been overshadowed by this weekend's news. There was on Friday we were supposed to have a multi-day attack starting over the weekend. Then, of course, here we are Sunday, and there's a deal, and negotiations are going to start again on Monday, I guess, nuclear negotiations. So the stock market didn't have time to really react over the weekend. So here we are. Futures are up. S&P looks pretty solid, and I also want to say, and we've talked a lot about this the last few weeks that I've been here, and I on the Sunday Open. There's no really reason to be bearish equities. There's a lot of reasons to be bearish equities. I should actually take that back. But technically, we're still holding where we should hold. And that's above this, multi-year channel that we've broken out of. Every low for the last 2 weeks have retested that trend line of the previous channel. So if you just think about that and say, okay, last week's low was this level, which was around 7,300. Depends on what you're looking at. If you're looking at futures, that low was 73. I believe it was 73.12 or something like that on the continuous. If you're looking at cash market, it's a little bit different. But just look at last week's low. As long as we're above that, technically speaking, there's no reason to be bearish. We could give you a bunch of reasons to be bearish, but that doesn't mean the market's going to look at things in our lens or your lens either. So I just wanted to make sure that everybody knew that technical level is so vitally important. Our lows from last week, we just got to hold them. As long as we can hold them, everything looks constructive. So
yeah, Pax, two interesting numerical data points that I was told over the weekend. One, the president has won his 43rd golf championship at one of his clubs. But more importantly, two, this is the 31st time that we've had a deal on Iran. Is this one going to stick? The equity market reaction so far seems a little bit more lackluster than I would have thought. How are you thinking about the setup here for equities as we head into the month of August?
Well, I have to say congratulations to the president on his 43rd club championship, and to be the only player at 80 years old to be able to shoot 70 or under pretty consistently. And also congratulations to being completely truly the best negotiator in the history of negotiators. So this is our 31st deal.
Yep.
All clear. Buy the shit out of them. Makes me want to fade everything. Oh, golly. I hate being such a pessimist. But, no, last week was a great trade. Yeah, I don't know. Go ahead. Do it now.
Let it rip.
Yeah. Last week was a great trade. It was truly a great trade. Sunday night, maybe it wasn't Sunday night. I talked about everything. I think the NASDAQ has been by far and away the best trade, from a trader's standpoint. And, we're still solidly below the quarterly pivot at 30,263. And that gave us a downside target of 27,280. And the NASDAQ traded right down to it on Wednesday. It was a great trade. It was a big low. It was a great low. It was a big low. The S&P downside target on Wednesday, it was a little bit less clear, but 73.50 or 73.57 to be exact was the price that the S&P needed to hold. Last week's low now is going to be a big place to stop. That 73.24, 70. If you're looking at extended trading hours, or 73.28. If you're looking at our or 26 quarter, same thing. 24.26. So that's a big low now too in the S&P. Like Blake said, it's all clear ahead now. Technically speaking, this is pretty bullish. The dollar. Dollar coming off a little bit, gold rallying, nicely and holding there. Those bigger pivotal levels that I've been talking about for the last couple of months. You got crude selling off. That's good. So crude is going to target back down to 77. And, it's anybody's guess as to what happens. What I think the most interesting part of this entire equation is that, we were talking about before we came on is the bonds. The 30-year bond, a 10-year note too. I sat and watched those things sell off on Wednesday during the Fed meeting, and somebody came in and just hit the bids. I'm sitting there watching the bonds. The S&P was trading at 74.75, and the bonds were trading at like 110.10. 09 offer, 8 offer, 7 offer, 6 offer, 5 offer, 4. I mean, they just hit them. So that as the bonds were getting whacked, that became, very bearish for equities too, at least in a capital flow. So it was just became, Wednesday was a great trade. It was a great trade. It was the best trade I've had in a long time. I'm not looking to, I mean, technically speaking, we're rallying. We've held some big lows last week. Okay, I'm going to watch the bonds. I'm going to watch gold. I'm going to watch the dollar. I'm going to watch I'm going to watch crude, Brent, and I'm going to keep my powder dry until I see something clearer. Because I've said this a million times. I've never seen a bid that I have not wanted to hit. And with this Taco Sunday, I don't know. I saw a video before he came on earlier of General Wesley Clark talking about how U.S. hegemony is in trouble if we don't control the Strait of Hormuz. And all I kept thinking about was February 24th. The Strait of Hormuz was wide open. Now we have issues. So I don't believe this peace deal is happening, and or whatever deal, or whatever the hell was announced. I don't read it. I don't pay any attention. I can't control it. I cannot control what the market does. I can control my thoughts, my actions, my words, and my deeds. And I can try to control my emotions. And so part of that is to lay off this market and to not be involved in it until it makes sense to me. And Wednesday, it made sense to me. This doesn't. So I'll watch. I'll wait, and I'll keep my powder dry.
Yeah. Farm, kicking over to you. One of the things I typically ask Sarah on the Sunday show, and we miss Sarah, of course. I think she's on vacation this week, but is this the relative strength between the NASDAQ, the S&P, the Russell, is something leading? Are they working together? Clearly what we've seen, or not, and what we had seen is this big NASDAQ underperformance for quite some time. But then you had this kind of a bit of a capitulation narrative developing with the situational awareness liquidation event that happened towards the tail end of last week. For those who don't know, it's all over FinTwit, but big fund blow up, sold its whole portfolio to Citadel. And that may have led to, some sort of, short-term bottom. But are you seeing anything that would suggest that it's time to rotate back into NASDAQ on a relative basis? Is it too early to tell? How are you thinking about the setup for the NASDAQ, the S&P, and even the Russell as we head into the new month?
I definitely think it's too early. I feel like on the rally, let's see, Thursday into Friday, I think it was. I was sick at the end of the week, so I could be mixing up my days. But it's like the NASDAQ kind of got us there. Yeah, no, Friday. NASDAQ kind of got us there, but then the Dow had to take over and push ES. Kind of the non-tech components had to push it as NQ flipped back into some structural weakness relative to ES once again. And here at this point, I mean, NQ's not even at Friday's high, I don't believe. Just yet. So, whereas ES is well above it. So, I mean, NQ put in a nasty excess high on Friday. Didn't look fantastic. So I think it's too early. We need to keep watching this and see how this shakes out. And then it's like, I mean, it's going to be hard for me to be too bullish the Russell with the bonds doing what they're doing. It's going to be hard to be too bullish, the NASDAQ, but as really everybody has said, I mean, the ES came down and came into a big spot here, right? So we talked about, I had this box down there last week that I think we should nickname the glory hole, because sellers kind of jammed it in that glory hole. And there was a piranha on the other side, a piranha named Farm. And so, like, it's a good look, right? I mean, we took out this 73.57 lows. We talked about this as being like a failed attempt at expansion, right? That then reverts back in, and now we're taking stops the other way. How far does this want to run? Does it just want to run to these stops? Is it going to come all the way back up? We don't know, but ES looks fine, and it still has not yet taken out a prior month low. So it's hard to be meaningfully bearish indices until there's some kind of a multi-month balance break to the downside. NQ at least has formed that 3-month balance. We have taken out a prior month low, right? So I've outlined with these levels, your 3 months balance low now. RTH basis is 317.5, and then 202 on an ETH basis. And what matters most to me is if this can be sticky and firm above this 28.2, 28.4-ish range. So I was looking to see if we could get a higher high, ideally above this sort of 763 roughly, this 4-hour lower high, and then find bids in this 227 to 408. Now, obviously, we've gapped out of there, so that looks pretty good. So you're like, okay, well, this is it then, right? Because to me, firm strength back above this kind of 400 range is coming back up to 29,269 to 369 range, the site of the most glorious short I've had in a long time. And above there, I mean, it's just coming right back up to 30,069. So, I mean, there's potential for NQ to really take off. We haven't traded a single minute of cash. It's Sunday night, so it's a little bit early to get too excited here just yet. But big picture, this reminds me a lot like this range reclaim, you see. And again, I'm not calling it reclaimed just yet here. But if we get like higher highs, higher lows above this spot, then it's going to look a lot like it looked in April of this year when we had that multi-month balance form out over like a 6-month period, right? And then we broke below it significantly, didn't even really put a very good low in. But once we reclaimed that range, it was gone. And if you were fighting it all the way up, you got your ass handed to you. So like, I'm very careful not to do that. So how this shakes out, whether or not this gap sustains, is going to be very important to me, and how we play this. If we end up back below, June's low, it's kind of hard to be super bullish that, right? But if this is firm and sticky and we're making higher highs above this spot, I don't know why we're not coming back to 29,269 to 29,369. That's going to be a pretty good look. And what's the ES going to be doing there? I mean, how weak would your non-tech components have to get for ES to do anything but make a new high? So I definitely think it's too early to see where the strength is going to be. I think we're going to have to watch it at every damn open for the foreseeable future. You're going to have to be careful with your emotions during Asia sessions still for quite some time. But for now, everything looks constructive if this move sustains. And if this move generally fails, then not so much. And I'll just flip over to 30 just kind of real quick on these weekly profiles and point out that kind of gnarly excess high, and SMH had the same type of thing. So what buyers need to do, then they need to negate that. They need to get up through that high and just say, just kidding, right? Whereas if this move is given back and we're back below 28,500s or so, and really, I mean, I've got these 3 levels just in close proximity. I mean, 100 handles apart, which I usually don't like to do, but they're all just so important. So until or unless sellers get this all the way back down, back below 500, traction through here, and take out a prior day's low. Until that happens, buyers still have the momentum coming off the low, right? We've got, structural higher lows, higher highs on a 30-minute chart. So why are you standing in front of it, right? So wait till we break that structure back to the downside, if that is to happen. And then I think you can short the hell out of it. But if this is, again, firm and making continued higher highs, higher lows on a 30-minute chart, back above this kind of 28,200, 28,400 range, that it has some legs potentially.
Yeah.
What exactly is the Asian session? What time is that?
Right after the U.S. session closes.
I've always said 8 p.m., but now like the Kospi opens earlier than that, so I'm Eastern time anyway. So, but I consider it 8 p.m. Eastern anyways. And before that is just like a couple of New Zealand traders, Refugio at the JPM desk down in the islands or something like that. I mean, nobody's trading this shit right now. Other than Sundays, they do trade it, but most days, not this time so much.
Yeah, I would say it's probably, if you're thinking like Eastern time, you're probably thinking somewhere around 9 p.m. Eastern time. Asia really starts to kick off a little bit. There's like a dead zone between the time the stock market closes and that next couple hours, where, as Farm says, you got some New Zealand and Australian traders that are in, but really, it is a little bit later in the evening.
Nowadays, just go into your phone and I literally have the Sol is in my clock, right, to know what time it is there. Because when they're open until when they close, buckle up, right? It's been crazy. And we've seen these massive character changes. It started off like 30 minutes before they're closed, right? If it was like a crazy bullish session, like 30 minutes before they closed, you could probably hit a nice short. Then it moved to like an hour ahead of time, and even maybe 90 minutes. So I'm always watching what's happening when the South Koreans, if they decide to kick off the desk for a jump start on the hookers a blow after work, maybe we get a character change. So that is something that I will look for. Obviously, that's not anytime soon here. We still got a couple hours before they're properly open. So it gets interesting if this move does not sustain. And this is a very important moment, I feel like, and a very important night.
Yeah. I also wonder, we've been obviously following Korea, pretty closely now for the last several weeks, even months. And I do wonder, though, are we going to start to have to monitor the Japan Open? Are we finally at the point where we're going to be getting this two-way action, this two-way back and forth rhetoric from the MOF, maybe the Treasury, the Ministry of Finance in Japan?
I know.
Yeah, sorry. About where dollar yen is, right? Because this is now moving. Korea is definitely still top of mind. Semis, DRAM, memory. Every night, the back and forth. But if we start to transition to, well, what is Korea doing? Are we intervening? Is the Treasury involved? Is there a rate check? Do we start to get the beginnings of carry trade unwind? What does that mean for the dispersion trade, for leverage? I think this week is going to be pivotal on that. We obviously had a BOJ meeting last week on Thursday night, our time, Friday morning, and kind of nothing done there. The BOJ is eventually going to hike. Who knows? Maybe at the next meeting, we'll see. But it does seem now that the Treasury here is going to start intervening actively to help support the yen. What are they doing? Are they trying to slow down the selling of U.S. Treasuries and prevent yields from breaking away further to the upside? I think so. So that's clearly something we're going to have to keep an eye on, Blake. But where are the key levels for you, dollar yen, that we got to watch? And so if we got yen rally, through 157 or whatever, can we get back to 150? Or where are the levels where you'd be selling yen, for a move back to dollar yen back to 170? How are you thinking about the yen here? Because I think we're going to be talking about this a fair bit more over the course of the week.
Yeah, I think so too. And I'm gonna show you the yen here in a second. But I was just reading a note that came in from Torsten Slok. He's the Apollo chief economist. And he was just sending out something which I was echoing earlier last week. Actually, it was last week? Last week here on the carry trade. He says the carry trade's been dead since beginning of this year. And his note just came out like literally before we started the show. And I couldn't agree more. I'm not a big, I don't believe in the carry trade. I believe more in the emerging market trade. Although Japan's issue is that you have a yen that's at a 40-year low. And I believe, and Craig, I'm going to go back to the Nikkei because you were talking about the Nikkei and saying that we're going to have to start paying attention. I believe this is true because what the Japanese government's trying to do, not only are they trying to support their yen, they're also at the same time, it's kind of like the Abe, three arrow approach. If you probably remember back in the 2000, what was that? 2005 time? No, 2011,
13,
2000,
yeah, 12, 13,
13, something like that. Yeah, exactly. The three arrow approach. Well, they want to shift government pension funds want them to come back to Japan out of other countries, notably the US. So if you start seeing some moves that you see, like this is the Nikkei. Yeah, the Nikkei could come off a little bit, but how is it moving in relation to US equities? If you see US equities selling off more and then the Nikkei maybe outperforming, that might be more of one of what Japan's trying to do is to get the GPIF to put more into away from everybody else into Japan. So I think, yes, we need to follow the Nikkei. I don't know if I would use it as a direct correlation to what's happening in US equities per se. I would just be looking for rotation. Is the Nikkei going to outperform US equities moving forward? And I think that truly will be the case in my opinion. And this is just what they're doing with the yen is one major step. Now, going back to your question about the yen, I am looking at 155. That's the only number that I care about right now because that is really the last low that we saw on their last intervention effort. You can see it right here. We've already severed this, rising trend line. At least we're probing it. Like, technical analysis is funny. I always try to explain people technical analysis, there's no it's not an exact science. It's like horseshoes and hand grenades.
Great
Close,
song, by the way. Great song.
Yeah. Well, I don't. Is there a song? I didn't.
Yeah.
I want to hear that song. You gotta send that to me.
I'll send it to you right now, as a matter of fact.
Oh, I'd love to see. I'd love to hear it. But horseshoes and hand grenades is basically, close is good enough sometimes. In technical analysis, same thing. So when you're sitting on a trend line, or maybe you're below it, like you see right here, I'm like, yeah, I'm also not Goldman Sachs. I'm not Matt Pax either. So, so I don't have the money to really drive these markets. So I'm, I pay close attention to them. I know we're on a key level, but it's thereabouts. It's close. Like it counts. But what does really count is that low from the last intervention, which was down at 154 and change. And you can see there's, multiple legs there. And actually, you know what? I was reminded that May of this year was it was a warning shot. I think it was talk. Actually, I think that's what it was. But regardless, that is a significant low. And if we break that, Craig, now technically you're making a lower low or a higher high in the 6J, which if you guys trade, most everybody here trades futures. So I'm just going to go take a look at the 6J really quick. 6J has actually turned, and we've had this big false breakdown, and we've broken that trend line, and we're breaking the 200 DMA. It looks pretty bullish technically. Like I'm not a big believer of intervention that is the catalyst that drives an actual reversal, but it sure can kickstart it. And
that's a great point.
Yeah, I think they're taking a lot of steps to really try to turn the Titanic here. That's the point I'm trying to make.
You know what that chart right there looks like also, Blake? It looks like the chart of 1 month implied correlation, right? So there's definitely been a relationship between the strength in dollar yen and the dispersion trade and the correlation trade. And so we've seen this kind of massive single stock dispersion. Index volatility has been very subdued, but single stock volatility has been very elevated. The S&P has been pinned, for lack of a better word, but we've seen under the hood, drastic moves in either direction. NASDAQ versus Russell, semis versus software, energy at times, but the overall S&P doesn't really move all that much. And that's been very correlated with this strength in the dollar and this move in the carry trade in dollar yen. As the yen starts to rally back, I think we're going to start to see more of a correlated move in equity indices. From a timing perspective as well, we're kind of in, the window of potential weakness is open. We're past, we're past earnings for the most part here until NVIDIA in 3 weeks. And so the market's more likely to trade in a more correlated fashion here. And we got a ton of macro data this week that I think is going to help drive currencies, drive yields. That'll help move the equities indices in one direction or the other. I think we're more likely to get a beta move. As I mentioned, we have the ISM tomorrow. We get the ADP later this week, the services ISM on Wednesday, and then we have non-farm payrolls on Friday. And so, is the U.S. economy, which has been quite robust, not particularly impacted by the higher energy prices yet, by the higher yields yet? Was that the case in July? I mean, we'll see. The ADP weekly job reports we've been getting have been showing deterioration in payroll growth now for the last 8 weeks in a row. So we've got to keep an eye on the labor market on Friday. We'll get these services ISM. I think that'll be important as well. There'll be some World Cup data in there too, but what does the outlook look like? Can this economy really survive 30-year yields above 5.25%, mortgage rates approaching 7% again? I'm not so sure. That's going to start to potentially show up in the data this week. I think that's going to be important. And Pax, the other thing on dollar yen is it has an impact on treasuries, right? It has an impact on the long end of the curve. If Japan has been selling treasuries to slow down the pace of yen weakness, it's showing up in treasury market. I think that's part of the selling we've been seeing at the long end here. How are you thinking about, you mentioned the long end at the onset, but we did see a pretty big breakdown technically in 30s last week. What are you thinking here?
I'm bearish 30s. I'm bearish 10s now too, but I'm super bearish. 30s needed to hold 109.16 last week. It needed to. Otherwise, we are going to target the October of 23 lows, which is 107.04. I think I have charts. I should look at my charts to make sure I'm right. But anyway, that's it, right?
That's the level, by the way, Pax.
Yeah, and now last week's low is going to be important, which is 108.08. 108.08. So I don't know. The 30-year bond has not been able to really sustain a bid for a long time. Well, again, I have charts. I can look at them. Give me a second. Has not.
I've got them so everybody else can see them. Like I've got the 30-year up right now too. So.
Well, I mean, you got to go back to on a monthly to look at the high of COVID. The COVID high, which was all the way up to. I mean, it was overreaction and a spike, but all the way up to just above 120, and it has not been able to sustain a bid. Every month, if you look at a monthly, has just been lower, and then like the dreaded creeping breaks. For the last 2 years, we had a little bit of rally up to 124 and then back down again. It just can't sustain a bid. So, at what point does the equity? At what point do the equities kind of follow suit and start to react to not the tech stocks and not the AI stocks, but the broader indexes? At what point does that start to drag on the indices? I don't know. We were talking about that before the show started. I have no idea. It is interesting, and I do think so the next line in the sand. Next major, we have to 30-year bond has to hold last week's low. Otherwise, we're going to be trading a point lower to 107.04 pretty quickly. And if we take out 107.04, then technically speaking, we have a long way to go on the downside. If we take out that October of 23 low, then we can see a 9 handle, and that's very bothersome. That's technically speaking. Now, I think that we'll have yield curve control long before something like that happens. But here we go.
Yeah, I mean, look, you mentioned, the tech sector maybe not necessarily, being impacted, but, AI credit has been weakening pretty materially now over the course of the last, let's call it 6 weeks. And then now that all the hyperscalers have basically reported, it will be interesting to see if any of them come out next week and hit the bid and sell more debt. Typically after earnings, we get another round of financings that get done. Obviously, last quarter, we got Amazon bond deal. We got a Google equity deal. We'll see if either Meta or Microsoft or maybe Amazon come back to the markets this week with some more supply. But credit has been weakening in the AI channel. Spreads have been moving wider. That's been something that's new. We haven't really seen a credit cycle yet, or at least in the last several years. But if credit starts to widen too, with the long end being as weak, then not only do you have yields moving higher, but you have spreads blowing out. It's kind of the double whammy for many of these names. You're seeing some of the lower grade credits like CoreWeave and some of the other cloud names are really struggling, with this higher cost of credit. And so someone I forget who it was on FinTwit mentioned kind of this rolling bottleneck situation in the AI trade. First, it was chips, then it moved to memory, and then now is it going to move to capital, right? Are we going to finally get a bottleneck here in capital where debt investors start to command higher interest rates to lend money into this sector? And what is that going to mean for the rest of the economy? The rest of the economy is going to get crowded out. I mean, we're already seeing it, right? Some of the areas of the economy and areas of the stock market like housing and retail, the low-end consumer, have been getting blasted, right? They're nowhere near their highs in any of those sectors. And so the more that we get that pressure from credit in the AI space, the rest of the names, the more inferior parts of the economy are going to struggle, even more mightily. But just a quick look at the tape here. About a half hour in, and thanks for everyone for joining us on Sundays. Make sure to like and subscribe to the channel. Ask questions in the chat as we go. But Nasdaq up 72 basis points, a little over 200 handles. I mean, frankly, given another taco and that the war is behind us, that's not such an impressive bounce. I would have thought we would have got a little bit more. S&P's up 40 basis points. Russell up about 55 basis points. Crude, obviously, the underperformer, although back above 80 now, only down 4.5% to 80.76. I mean, at some point, we are going to have crude move from a dynamic where the president can control it with his words to the fundamentals really are starting to matter here, where demand is too strong, supplies are weak, supply growth is weak. I think OPEC actually announced that they may be even bringing production down. I know Shai will talk about that tomorrow morning, but inventories are obviously been drawn down. The SPR is low. If oil doesn't ever really fall back again, those inflationary pressures are going to be with us. So that's going to be top of mind. And then this bond market, we're 108.27, so about a half a handle. It's not really that impressive here of a sell-off here. And then gold, up 40 basis points to 41.23 here. So wanted to shift back to you, Farm. You typically have, well, in addition to your poetic sense of humor, but you typically have your pulse on kind of the cross asset figure or dynamic, the nugget that you're watching to help guide you. Maybe create bias on sometimes, but for all of us, we have bias. But what are you looking at here? Is it yields? Is it oil? Is it gold? Is it yen? Is it something that you're thinking, okay, this is, I got this in the top left part of the screen here. I'm watching it throughout the day in order to assist me in the futures trading?
I mean, the one thing that I'm still looking at here, and I'm long the yen, is how USD, JPY, or just the yen in general responds outside of intervention situations, right? Like, no shit, it's going to go down when Bessent or the Ministry of Finance hits the bid, right? Of course, it's going to go down. I think you really start to pay attention once it continues that downward trend, absent additional intervention. And like Blake said, you've got that low staring at you at 155. All I'm seeing looking left is a whole lot of stops. You'll remember this path I drew, right? Do we get a breakout that sustains out of this big range, or do we get a failed break that comes back through? All I see are stops. So if they start running these stops below 155 and then run for the next ones and the next ones, it gets very interesting. And I have a hard time believing that equities don't respond to that. I mean, whether the carry trade is alive and well as much as is advertised, or it's just repatriation of Japanese retirements, or like whatever it is, it'd be hard pressed to think it doesn't matter to equities, especially, and then of course with the bonds, right? And we've all talked about this, right? I mean, to me, this last range that held earlier was the last sort of demand that protected this 2023 low down here. And so to me, I don't see how we can ignore a technical break of that magnitude if this breaks and sustains. Now, obviously, if we get some kind of a sweep, some bullshit happens, who knows, right? They save the bonds, I guess. But I don't feel like equities could ignore a deep pull in USD JPY, and I don't think that equities can ignore a meaningful technical break on the 30-year, 10-year, whatever you're looking at. If we actually get that break. And so that's what I'm going to be looking for. If we get into a situation where we're into August OPEX and things have been constructive and equities look good, but like bonds are shit in the bed, currency volatility is blowing out, I'm going to be really, really careful out of that OPEX for sure. So I'm going to be keeping those on watch every day. It's going to be on watch for me just to see how equities are responding. They can ignore them for a period of time. But I think those meaningful technical breaks will matter. And I've said that a lot. The bonds can chop around. They can be up one day, down one day. And, things might not make sense. Like, oh, why is the Russell up? The bonds are getting crashed, but, or getting stepped on. But like, there's not a technical break. So what? They can do that. But a technical break, a meaningful technical break, such as, continuation through the 2023 lows, I just don't see how they can hang on. We do have a lot of data, you said, this week. I don't know why everybody's talking about non-farm. Who cares about anything non-farm? I don't understand. But, we'll see if we get this data. I have a hard time believing that the BOJ and Bessent are bidding the yen into some super strong payroll data. Probably not, right? I suppose it could be, some kind of preventative maintenance to know that the yen's going to get stepped on. I doubt it. It's probably soft data and they're getting things started, right? That's the best way to rinse out a little bit of overcrowded positioning. Let's get that move started, and maybe they bid them up on the USD JPY into the event, and it gets stepped on again on some soft data. Who knows? We'll see, but we'll be watching how those assets react.
So buy the yen, sell the 30-year.
It's kind of how it's been, right? I'm long the yen. And I've just been kind of waiting patiently and low leverage, right? I'm not like in calls or anything. I'm not in 6J futures yet. I want to be now. Obviously, I was sick the last couple of days, so I missed that move. But I've got like a 2x leveraged ETF, and I've got literal straight up FXY comments, like the boomer ass mofo I am. And I've got those are kind of going to be like my runners, and I plan to take calls. I haven't even plotted out like some of the nitty gritty levels on it yet. But if this actually does produce a meaningful downtrend in USD JPY, I'll probably be looking at like FXY calls or 6J calls or just outright long 6J.
But isn't that the point though, Craig or Blake? When you guys made that point earlier, that with yen strength that they're selling into the 30-year, or did I misconstrue that?
Yeah,
Well,
go ahead,
Craig.
Yeah,
Craig,
I was just going to say that the Japan can sell U.S. dollar assets in order to slow down the pace of yen weakness, right? And so, in order for them to actually rally the yen, they need to sell some of those dollar reserves. And so,
probably why Besson stepped in to say, "Hey, quit selling our bonds. I'll bid you."
Exactly.
Right? Is that kind of what you're saying?
Yeah.
Right.
So
Right.
bond treasuries are weak. The U.S. Treasury has the Exchange Stabilization Fund. It's a slush fund pool of money that Besson can basically use to kind of do whatever he wants, and probably figures better for me to go and sell euros to buy yen than for Japan to keep selling treasuries this week when clearly treasuries are on the move, right? And we're starting to get to a point where maybe the bond market's getting a little bit concerned about inflation fighting and what's going to happen, all the supply that's coming. We also have the QRA quarterly refunding announcement this week. So tomorrow afternoon at 3:00, we'll get the level of financing for the next quarter. And then Wednesday morning at 8:30, we'll get the composition of duration issuance. And there's no real expectation for the Treasury to talk about increasing the size of coupons yet, but at some point they have to. So some people have suggested they could adjust some of the language in the forward-looking statement of the QRA that maybe suggests coupon supply will grow next year. We'll see, but that's another pressure that could start hitting the long end of the bond market. So you're right. I think Besson was kind of thinking, I got to get ahead of this, and he's a hedge fund guy, right? So he's going to use the market. He could be the market manipulator, right? He can manipulate markets how he wants to. He has various tools in order to do things, and he's going to do it. And I think one thing that's interesting for me, and one thing that I've been starting to nibble out a little bit, we were talking about it pre-show, is gold. Gold's kind of been, I think Blake and Pax both looking potentially for one more flush out here, one more lower level. But I like this, kind of sideways, kind of, volatility is starting to get sucked out of the gold market. It's kind of been range bound now for the last couple months. Bollinger Band really narrowing here, maybe, indicative of something that's, coming down the pipeline soon. But gold typically likes to anticipate, more liquidity coming. And so if you're concerned that yields are rising, the economy is maybe starting to get hit by these higher yields, eventually we'll get stimulus, we'll get yield curve control, we'll get one of these things to slow down that move, and that's going to be bullish for gold. I would say yen intervention is also going to be bullish for gold. Gold's up a little bit this morning, but Blake, how are you thinking about the gold setup here?
Well, I'm looking at it. So it's a descending wedge, and I see it on a couple of different charts. Whether you're looking at a CFD or you're looking at the gold contracts, I actually think that this move in yields, and going back to what you were saying about Besson and Japan, and I mean the thing is you're right. I mean Japan's selling, they're selling treasuries to buy yen, to fund their yen purchases. And Besson's trying to get ahead of it, but yields still continue to go up. So there's a lot of sellers out there. But as yields go up, that should put downside pressure on precious metals. The one thing I know everybody's, and I'm looking at it too, saying that I think we're trying to build a base, but just because we're trying to build a base doesn't mean that this is the low. If it is a descending wedge, which I truly believe it is, then we might have, especially if yields continue to go up, we might have one last low towards 3,800 before we actually actually make the reversal. I do think these are the levels you want to be involved. How about this? If you bought gold today and you closed your eyes for 6 months, you're probably going to be happy that you did. Will this be the low? I don't know. I think that there might be another level that you could buy a little bit better, but I think over the course of time, you're going to be happy that you bought gold down here. I truly believe that based on the technical pattern I see.
Yeah. Pax, how are you? What are the key levels for you on gold?
I agree with Blake. And I own gold, and I want to own more gold. The key levels in here are going to be 30. On the downside, if we take out 4,100, it'll be 40.78. Then the quarterly pivot, the new quarterly pivot of 40.35. Underneath there is going to be the major level that we've been talking about for the last couple months, 39.83 on the downside. It needs hold. If it doesn't, we'll see 37.75, and that's where I'll step in and buy a bunch more physical. But Blake is 100% right. You can't go wrong buying. You cannot go wrong owning gold. From a trading standpoint, the Bollinger. I saw a kid on Instagram last week, like a 12-year-old boy, talking about Bollinger Bands. I thought that was the coolest video. Anyway, with everything, with the ranges narrowing and things, we're basing, or we're going to turn around and break a little bit, and then we'll have like a capitulatory break, and then we'll turn. I wonder if that's a word. Capitulatory, we'll capitulate a little bit down to 37.75 and then turn around and start to rally sharply. But I don't know. I think that from a trading standpoint, I think the swings have been very, very clear. 39.83 to 40.35 to 40.78 to 4100 to 41.39, and then 41.39 up to 41.80. It was 41.87, but we stopped at 41.80 last week. And then 41.87 to 42.15, and then up to the upside extreme target is going to be 43.25. So as long as we're above 40.78 and 4100 and 41.39, then gold targets up to 43.25. So I don't want to. I'm not going to step in and start buying them here. I would like to see that sharp move down below 39.83. I don't know what the catalyst would be to get that going. You guys might have a better handle on that than I have. But I'd like to see that sharp move down to 37.75, 3800 to just step in and buy a bunch. That would be like a year making trade. I talk about trades that make your quarter, make your month, make your year, and that sometimes make your life. It would be like, Cagnina and I, and we talked on this show at the beginning of it too, buying gold at 33.34. And I talked about how pivotal that price was for so long. You can go back, it's on YouTube. That was a life-changing trade for many people, including my family, from 33.34 all the way up to 4,400 to 5,400, and then back down. Well, 56.26 was the high, but we talked about all those levels on these shows. They haven't changed, and they'll continue to trade them. Yeah. So I don't know. Here, nothing really. It's just a bit of a back and forth swing.
Farm, over the last 15 years, the best month for gold has been January. The second best month on average, August, 2.34% average gain over the course of the last 15 years. Last year up 4.8%. The year before up 2.25%. The worst month for gold, September. So gotta get your timing right here. But if you're constructive on the yen, are you constructive on gold too?
Yeah, I mean, it still is though a multi-week balance. I drew a little fun path here. I'll get to that in a minute. I like to have a little fun with these, but it is still just a multi-week balance. I mean, look at this chop, this box here, right? Running roughly 39.55 up to, I think it needs 42.50 anyways to really break this range and sustain to the upside. But I wouldn't mind a quick washout, right? Something that rinses out these lows and then reclaims and makes a run and then starts going up so fast that it goes backwards in time, that would be an excellent trade for me. Maybe something like 38.69 is a decent spot, whether it's PAX's 3700s or whatever, 3800. It doesn't really matter. This range is going to be key. So even if you're taking a long below there, it'll have to reclaim this range no matter what. And if we do get a washout through there, it probably zips through this range pretty quickly. So I'm really just watching for a break or a failed break of this range. I mean, if it comes up here, Blake's got a wedge on there. Okay. So if it pops that wedge and then comes back in, it's probably going to look real bad, right? You're probably not going to want to be long, right? It's probably going to come right back down to the bottom of this range. So I would rather see a failed break to the downside. I'm long miners for now because I'm just not quite ready to be any kind of leveraged gold long just yet. But if I do see some kind of, perfect setup, some kind of sweep of these lows, something like the ES setup from last week, I don't see that yet there on gold for me to get leveraged long gold. But I'll stick with the miners and I'll add, to that position, if I see some kind of technical setup. But for now, it's just stuck, right? And it has made great trades across these levels, for sure. Very clean profiles to work with. I haven't bothered changing anything, and I probably won't until this range breaks. But I do like gold, and I kind of agree that it just may not be ready because you're like, well, what the hell, right? If the dollar gets stepped on as the yen strengthens, that's good for gold, right? But if the bonds are going to zero and possibly negative numbers, maybe even imaginary numbers with the bonds, that's not good for gold. So, what do you do there, right? So it's kind of a trash situation here. But at some point, I think I've held for a long time that either the dollar's going to die or the bonds are going to die. And you really think they're going to let the bonds die? I don't think they're going to let the bonds die. So I think that ultimately bodes well for gold. However that plays out, whenever that plays out, and whatever that looks like, they have a plan. They're probably already working on that plan. Who knows what the hell it is? But I feel like it almost has to benefit gold in the long term.
Yeah. 50 minutes in, I'd be remiss if we didn't at least touch on oil real quick. Right before we got on the air, Trump on Air Force One after the golf championship said that new Iran negotiations will begin Monday afternoon. Gulf nations said deal is imminent regarding Hormuz. Was asked by Iran, Saudi Arabia, Qatar, UAE to pause attack. And then in the last 10 minutes, Iran has denied Trump's claim on a Strait of Hormuz agreement and rejects his assertion that Iran requested a halt to the planned attack. So we are in the back and forth. Who did it? Who said it? Do we believe him? Do we care? Part of this trade. But Blake, the oil market, still holding here, well off the lows, well off the highs. Clearly, it's becoming more of an impact to the economy. Inventories are, fairly depleted. If we don't solve this imminently, we're going to have more trouble for the economy later on this year. What are the charts telling you?
I mean, the charts are telling me that you should probably be long down here. I mean, I know it's in crude's obviously it's headline driven. It's always a tough trade, but look at this support zone. This is, you can go back all the way to middle of June here, and there's a lot of support down at these levels. Actually, I bet you if I did just a quick fib between the low and the highs here, you're talking about a 50% retracement. So yeah, we're pretty close, and a 618 retracement is not far below that. So I would just say, while you're trading above $77, I think it's hard to be on the short side of crude. And we are in the fog of war. There's a lot of headlines going around. I just was, looking through some of the people in chat, and everybody's like, what should we be doing? I mean, that's a big drop in oil, giving the awareness that Trump is, spewing out all this false news. I mean, it looks like crude wants to go up, and yeah, I think it's extremely buoyant down here. I wouldn't want to be short. That's just me personally. I just don't think you want to be short crude, just with all the issues that you've already mapped out, Craig. But yeah, there's a big support zone. While we're above $77, it's really difficult to be short.
Yeah, Pax, any acts on crude here?
Crude has been my favorite trade besides the S&P and NASDAQ on Wednesday and the bonds. Crude has been a great trade for the last, I think, 3 weeks. The halfway back point of the year is 93.30. I showed the math of, just the simple math to get there. I don't know, a week ago. on Twitter, and we talked about it in here, and I retweeted the clip. So above $77, crude wants to trade up to 87. 87 is the halfway point of the move. 93.30 is a halfway point of the year. From 119.42 down to, I think, 55.78 is the low. See if I'm right. 57.41. No, that's not right. 55.76. I was off by 2.
Yeah, 76. Yeah,
2 cents.
66.
So 55.76. So that takes us to 93.30, and we stopped right there and then traded all the way to hell back down to 77.77, that pivotal price. And again, I've said before, draw a horizontal line on a chart and go back years, and you're going to see how pivotal 77.77 is. Not only is it God's number, but it's also an incredibly pivotal price. So I don't know what I want to do with it in the middle of the range, because it's really kind of all we're doing is banging back and forth, waiting for more headlines to either get us back down to $77 or to move us back up above 87. So above here, we've got a couple of spots at 83.04, and then above 83.04 up to 85.98, so 86 even, and then above that we'll see $87. Above $87, we'll see 93.30 fast. If we can close above 93.30, then we'll be in $100 crude territory again. But again, I think I'm bullish crude too. Especially above 77. We're in the summer, everyone's driving. Craig's been, like Robin.
I've been filling up. I've been filling that RV up every one. It's been expensive.
Just like Robin Williams in that movie a few years ago. You remember he was driving. I could picture you like all of a sudden that RV comes back with no hubcaps. Like Family Vacation with Chevy Chase and the.
We've had some issues with on this trip. There was a power issue. There's been a sewer issue. It's been where that's why I'm still remote, because I couldn't get home in time to do this from my house.
Let me ask you, what do you do when there's a sewer issue? I'm calling somebody. I'm not fixing that shit. No pun intended.
Look, when it's your own when it's your own shit, you take care of it, right? You got to take care of your own shit. I think that's really the only the only thing you can do.
Nope, I'm calling somebody. Definitely calling.
Nice.
There you go. Nice. But
Blackwater.
It's it's been a fun trip, but it'll be nice to get home. But
getting back to crude.
Yeah, right. Very good.
Getting back to crude oil.
Very good.
On that note, but just a few minutes left until the crypto closeout at the top of the hour. I will be joining Ponzi Trader for a few minutes there to chat about the crypto markets and Bitcoin and how he's thinking about and seeing all this cross-asset correlation stuff that's been going on over the course of the last couple of weeks. But NASDAQ up 63 basis points to 28,585. The S&P up 38 basis points. The Russell up 50 basis points or so. Crude down only 4% now, so a bit of a rally back from kind of the worst levels right at the onset. Gold up $14 to 41.21. Bonds are a little bit weak, but not materially concerning. And the yen is rallying still off those levels from Friday. So futures are up about 1%, but 157.23. So we'll keep an eye on the 155 level if we get there overnight over the course of the next couple of days, as Blake has pointed out. But I'll leave it over to you, Farm. Any thoughts here on the Bitcoin, as Jim likes to talk about, and or reference as we head into the changeover here to talk about the crypto markets?
It's the Bitcoin.
The butt coin. The butt coin. I have very little to add. I mean, look at this. It's doing absolutely nothing. No interest here. It's still consolidating above this 57.5 spot that I feel like is relatively key, kind of the last demand that I have before it shits the bed through 50s. But it's done absolutely nothing. Interesting that it's dry humping this VWAP here. I think this is VWAP anchored to the cycle low, if I remember correctly. So very little interest in this. I had been long hyperliquid for some time up to 69.69. The mean price, if you're not taking profits of the mean price, you're not going to make it. I'd probably be more interested in buying a dip there. But the Bitcoin interests me. I don't know. It's got to show me something though. It's just doing nothing right now. It's give me screw somebody, get somebody trapped, run these lows. I don't know. Do something exciting.
I think Sailor might be trapped, or at least nervous.
I hope so.
67 above 67. I don't want to. I'll buy it above 67, 67 300, and then pay for those at 74 120, and then take more off above 8100. But anywhere between that, it's not worth trading. I don't think. I own it. I want to own more, but not in here.
Blake, for a while, with some much lower levels were maybe anticipated. Have we run out of time on hitting those, or can we still kind of get down there if the world falls apart?
Well, okay, so I'd been actually relatively constructive. I'm like, hey, Bitcoin's holding up, but then again, remember we're at all-time highs on the S&P. We're not far away. So what happens if we do see a correction in equities? I don't think that Bitcoin can sustain, and it's not. And I'm with everybody else on this panel. Look, I want to own Bitcoin. I actually want to be long. I don't want to talk about being long. I want to just be long. But I still think that these targets down here, especially in the low 50,000 levels, that 52,000 has been ultimately the one of the bear flags, but. Shoot, I mean, the other bear flag actually, points to like 20,000, and I just don't visually see that as possible. But as you guys know, the markets surprise us all the time, and so I keep going back to how come it's not higher with equities at all-time highs right now, or just off all-time highs. It's definitely doesn't. It's got to not feel good if you're long a bunch of crypto right now.
Yep.
So
makes sense. All right, guys. Thank you again for joining me and joining us this evening on the Sunday Open for this August 2nd. Enjoy the week. Have a great week trading. And now let's kick it over to Ponzi Trader for the Crypto Closeout. Let's get cracking.
Let's get cracking.
Good evening, Mr. Craig.
What's happening, man? How you doing?
Doing well. Welcome back to another episode of the Crypto Closeout. We have no Trader Main today, but we have a Craig Shapiro sticking around for another extra 15, maybe 30 minutes if I can convince him. How you doing, Craig?
I'm doing all right. A little bonus session where we could talk. We could talk a little bit more. We could talk about my RV trip. We could talk about the Bitcoin. We could talk about whatever we want.
We got some scary stuff happening in the Bitcoin world. I don't know if you're familiar with what's happened in the last 72 hours, but it's the first time I've had to actually reconsider the entire Bitcoin thing in a long time.
Is this the cold card hacks?
Yeah. For those of you who are watching who are unfamiliar with what's happened in the last 72 hours, there is an old cold storage. And if you don't know the difference between cold storage or hot storage, cold storage is when you take your coins off of an exchange and you normally store them on a device like a Ledger or a Trezor or a cold card. And cold card was a really popular cold storage back in early, let's call it 5-6 years ago, 7 years ago even, maybe a little bit earlier, 2014, 2015. Wow, time's flying. And unfortunately, normally seed phrases are created with entropy, and what entropy is, it's random number generation, essentially. It's the simple layman terms. And cold card didn't have the best entropy. So as of late, you've had a threat actor use LLMs to brute force cold card. And what that means is essentially run variations of seed phrases together, and hundreds of millions of Bitcoin has been stolen from collectors of 10 years. So it's a real shame. But the issue is it's not actually an LLM issue yet. LLMs were used in this scenario for the brute force, not for the actual, let's call it quantum cracking. But it goes to show us where we're headed. And we're headed to a world where there are threat actors with advanced technology that are going to keep committing crimes. And does that mean that your Bitcoin's not safe now? No, but it means there's a world where we have to reconsider how we store Bitcoin. So this is the first time I've felt very uncomfortable with my long-term thesis on Bitcoin. What are your thoughts on that? Do you own Bitcoin cold storage at all? How do you store
Yeah,
your Bitcoin?
I do. I do own Bitcoin. I do own it in cold storage, and I have been, trying to get smarter on that my security and particularly after some of this news. I think that we maybe as Bitcoiners we got a little bit complacent about the threat of these brute force acts because we figured why do this to Bitcoin when you could brute force or LLM
Yeah.
banks, right? You just go after the banks. Their security is easier, right? Right. So let's go there first. But when you go after the U.S. or global financial system, it's regulators and police and securities agencies kind of come after you a lot more aggressively when you go after Bitcoin. Like, who are the cops? No one, no one cares as much. And so I think there is this unfortunate place that we're in right now, where part of the thesis is we can hold and store our wealth wherever we want, whenever we want. We can move around with it, and no one's going to take it. And now it's like, well, shit. Can someone take
Yeah.
it without us knowing? And that's it definitely needs to be thought about, analyzed, figured out, and hopefully the old guard in the Bitcoin industry will help navigate through with some solutions in short order to prevent this from becoming a much bigger deal.
Yeah, absolutely. I mean, the truth is, if cryptography is cracked via quantum, we have way bigger problems than our Bitcoin, right? Especially when it comes to a level of threat from, large organizations going after world powers, country versus country. There's full infrastructures built on technology that could be absolutely absolved by quantum. So yes, at the same time, it's scary for our Bitcoin, but it's scary for the entire world. And that's the traditional financial institution as well. The infrastructure is kind of dated. Ideally, most of these, let's call them conglomerate artificial intelligence companies, they're working with, governments at a certain level to help protect the infrastructure. That's the optimistic view, right? But the issue is there's so much fend money locked away in protocols right now that teams have kind of just abandoned, and it's to the tunes of hundreds of billions. So we're seeing, threat actors going after the dated projects with the teams who haven't really kept up with security. And it's just money to be extracted and coins to be sold on the open market. And you're right. I mean, stealing crypto is a bit different from stealing in the traditional finance world because it's a little more anonymous. Not to say that it is still difficult to launder money in crypto, right? Sooner or later, it has to hit a centralized exchange. If not, then cash. But that can be flagged forever. But yes, it's definitely the choice for threat actors today. So besides the fact of scary money, let's take a look at some Bitcoin because we had a slight move. We're trading at 63,342. That's 63,342. And it's been, as you guys were saying on the show prior, it hasn't been too exciting. And thankfully, for the first half of the year, I was kind of blinded to this. I've been a crypto maximalist for, 10, 15 years, but right around, I think honestly, it was this last move in January, February that I finally was like, all right, it's time to trade something else. And I've been super thankful that I've been trading stocks because this has been nothing short of fun, unless you're short, of course. I heard your opinion slightly on the last segment here. What do you currently think of this price action? Is there hope for the crypto maximalists here?
I mean, I think what's been going on, at least more recently, is you're seeing these kind of big moves in other asset classes, right? So you're seeing big dollar strength, these big moves in dollar yen. You're seeing this backup in yields in the long end of the bond market and treasury yields, not only in the US, but in Japan and in Europe are really starting to move higher with more aggression and velocity. Obviously, the oil market's been moving in a very volatile way. And so I think a lot of that cross asset movement has made it more difficult for anybody to say, well, if I can't figure out, what's going on in these other asset classes, where am I going to, where's Bitcoin, where's crypto really going to fit into my portfolio, right? I mean, I think crypto and Bitcoin does better when we know liquidity is moving in and central banks are easing and governments are printing and the economy is maybe moving from slowdown into reacceleration. And, we really don't have any of those characteristics right now. We have, tightening financial conditions. We have widening credit spreads. We have higher yields. We have higher energy, central bank tightenings. We do have deficit spending, but it's not like we're not like seeing accelerated deficit spending in the U.S. I mean, the government is, having trouble passing continuing resolutions here. And if the Democrats gain control back next year, then they're going to do no spending, right, for this administration. And so that is a concern, let alone the legislative stuff with the Clarity Act and all the other, stuff that makes it more difficult. And so, crypto as an asset class is just kind of, I feel like, traditional finance guys who maybe would dabble into crypto are thinking like, I got other things to worry about here. Hard for me to find, reasons to be involved. But then again, Bitcoin's still above 60,000, right? It never, we've been talking about, at least on the Sunday Open show for the last several weeks, like, these throwover moves down to 40 and the low 40s. Like, I thought we would have had it already into some degree, right? With a 30-year yields back above 5.25%, I would have thought Bitcoin was down at, low 50s or maybe even a 4 handle, and it hasn't been. So, that's just kind of some back and forth. So I haven't been trading it, really at all lately. I just kind of own what I own. I'm kind of looking for the opportunity to buy some when I feel like we are getting closer to angst, where we're getting closer to central bank panic. And after what I saw last week from the Fed, we are nowhere close to central bank panic right now.
No, I completely agree. And, from a structural standpoint, if we're looking at this without a ticker, without a name, if you had to look at this chart and come up with a decision of where you think it's going next, I wouldn't immediately assume higher in the foreseeable future. Not a good looking chart.
No, not at all.
I think I missed the first half of the show earlier. Did you guys talk about what happened to Leo and to tech and to situational awareness at all?
Yeah, I mentioned it a little bit in regards to that. I think in the moment, folks didn't really understand necessarily why the NASDAQ or why semis had been trading with such velocity to the downside and really been leading us lower, specifically, despite incredibly strong numbers from the memory sector and the chip sector and DRAM specifically. And so what we saw last week with situational awareness, getting blown out, and Citadel hitting the bid, basically hitting the bid, you kind of had a little bit of that capitulation volume event, at least from a narrative perspective, to not slow down that pace of selling. And so, then over the course of the last couple of days, at least, since then, NASDAQ's outperforming again, which I think kind of makes sense to me in a world where yields are actually moving higher again, because the tech sector has the access to the capital. The capital may be getting more expensive, but we're still able to finance all the debts. There's plenty of market cap. There's plenty of cash coverage in the hyperscaler space right now to pay this debt. But the rest of the economy, there is none. There is no cushion. And so it's not surprising to me necessarily after that kind of capitulation plus yields moving higher, that NASDAQ is starting to relatively look better, let's say, than the Russell over the course of the last 3 trading days. But so that's how we kind of mentioned it. But we'll see. I don't think to me, it didn't seem like the capitulation bottom. It just felt like an interim bottom. So that was kind of my thought from afar on the situational awareness thing, but it is pretty crazy how this guy was able to amass such an enormous position in such a short period of time. But look, that's what, great performance and leverage can do. And, when you kind of find yourself on the other side of the leverage coin, things can move rather quickly.
He is still up 80 something odd per day returns, which is,
it's pretty good.
nonetheless incredible for that size, right? That's wonderful. But yeah, I'm slightly concerned, and I'm not too optimistic on the recovery we saw from, the announcement of his capitulation. I don't think the lows are in.
But I tell you, I agree. I'm agreeing. I agree with that. I mean, I think we are.
I would venture to say new NASDAQ lows before highs, before new highs.
Yeah, I think you need to look. I think the bond, for me, the most concerning thing that I'm seeing right now is after last week, where the Fed, really said, we're going to give no forward guidance. We're going to let the market do the tightening for us. And we're going to allow yields to move higher such that the bond market starts to become more of a disciplinarian on the pace of growth in the AI sector and in the economy at large. This is allowing volatility to come back into the marketplace. We've gone for decades now where the central bank and the Treasury have suppressed the bond volatility around every turn. Anytime we get a little bit of bond volatility, a little bit move up in rates, a little bit of angst, the Fed comes in and does something about it. And Warsh kind of is saying we're not doing it this time. The reason we're not doing it is because inflation is running above target for 64 months in a row, and we're showing no ability to really get back to 2%. Now, some would say, well, you should raise rates. And I think his point was, it's better for me to allow the long end of the bond market to do the work for me. Whether or not that's going to ultimately be a smart decision or not, we'll see. But that's the decision that he seems to be very comfortable with. And I think he would be fine if we were in a situation where the long end selling off led to asset prices falling, which brought down inflation, which then gave him the ability to cut rates in the short end to help support some of the areas of the economy that are struggling. That's, I think, how he's thinking about it. He wants an environment of lower interest rates and a smaller Fed presence and a smaller Fed balance sheet. And I think he believes that he can use the long end of the bond market to help get him there. We've seen big moves in the bond markets historically lead to backups in yields, lead to risk asset price corrections. Saw that in the October of 2022 and 2023. We also saw that in September and October of 1987. But maybe hopefully things don't end and go down that path. But they could. I mean, we could see another 50 or 100 basis point move along it. I think we would get a 15 to 20% correction in the equity market pretty quickly if that happened.
I recently, obviously, I wasn't trading in the 80s, and I don't think you were either. But I recently saw a documentary on PTJ in 86, 87, 88.
Yep.
Have you seen it?
The Trader?
Yeah.
It's one of the best documentaries on trading ever, for sure.
I can't believe I hadn't seen it earlier. I'm obsessed with this type of content.
It's because it's because anytime it surfaces on the internet, he pulls it down.
Why is that? Why do you think?
He's actively, because I think he's actively tried to remove it from its existence, because I think he feels, because it was done whatever when he was 30, 33 years old, whatever. And I think he regrets kind of having it out there, because for the way it characterizes his lifestyle. And, there's pictures of him skiing in the Swiss Alps. But, I think he just doesn't come I think in the moment, he probably doesn't come across well. Now everyone's like, that's great. Everyone loves that. Everyone loves seeing that. But I think that was why he tried to actively pull it down. But it always winds up finding its way back onto FinTwit or on the. Yeah, it's a terrific documentary. And it definitely talks a bit about 1987 for sure, and the lead up and the setup for that. And part of the run up there was the backup in yields. Part of the run up into this 87 crash was that inflation had been running above target for quite some time. The long end of the bond market really sold off. Strife in the Middle East resumed, and oil prices started to move higher again. New Fed chair came in, Greenspan, in the summer of 87, and the bond market tested his resolve. And so, I don't know, some things rhyme. Sounds a little bit familiar right now. We'll see if the bond market vigilantes are as powerful this time around. And I think what's interesting is that you are finally starting to see credit spreads widen, right? The AI story had been, really bulletproof for years, and had first been funded with free cash flow, then funded with debt at very tight credit spreads, and now is finally, in order, like even Amazon in this most recent bond deal had to, take a haircut and had to, see yields moving, that they were able to sell at higher than before. So, the spreads are widening. Oracle CDS is now trading above 200 basis points. So the credit markets are waking up to, hey, wait a minute. There's a lot of paper that needs to be done, needs to be sold here in order to finance all this CapEx. We need to be paid for that. And I think that's the type of thing that starts to show up in equities and in risk assets, here and over the course of the next several months. And I'm not sure there's really much that like the president can do about that. You know what I mean? Like, he really, the tacos here and there. Eventually, the big money flows will reallocate based on a world of 6%, 30 yields, real yields, 3.5%. Institutional investors with trillions of dollars of assets will shift portfolios to move into more fixed income securities because they know what it means for the economy when we have these elevated interest rates for such a long period of time. So,
Is that something you'll do?
for me, I'm not sure I could still. I don't think I can lend the U.S. government money for 30 years at anything that resembles current interest rates. I'm just not good at. But if I saw like tips yields up, above 3.5%, like, then you're basically locking in returns at 300 plus basis points above inflation, like for the next 10 to 50. Like, you're supposed to have some portion of your long-term capital, like in that type of asset class. That's safe return. That continues to beat inflation. You're meant to be, putting some of your capital at those high rates of return, and there's really no, there's not much credit risk, really for the U.S. government, because they can always print money. But in the environment where they actually do print the money, then your Bitcoin gets paid, then your gold gets paid. So it's a good ballast, a good hedge for for that exposure.
Yeah, I mean, speaking of exposure, have you been partaking in any Korean adventures, let's call it, over the last 7 days?
Thankfully, no. But it does feel like a wild ride.
One in
A
30
wild casino.
Koreans were liquidated. One in 30.
I just that's crazy. Yeah.
I mean, the
It's
moves go to show, right? We've got a 44% pullback on the Kospi with a 26% bounce in a day. But keep in mind, this is an index, ladies and gentlemen. So that goes to show.
if you go back to like 1990, I guess it was 97 or 98, like first the issues were, in Thailand, but Korea came pretty quickly. And so Korea often finds itself at the tip of the spear for nonsense. And it seems like some of the K-pop folks have gotten a taste of leverage and a taste of being liquidated. And wow, yeah, it's been it's been wild for sure. But
Yeah, I'm so fathomed at the amount of leverage that's accessible to the average population out there. It's a pretty small country to have so much leverage.
yeah, so
I,
all right.
I'm, I've had a good time with it.
There's always the casino's always open somewhere.
Exactly.
So good stuff, man. I appreciate you letting me hang for 20 minutes here and chatting on markets, and hopefully we'll all be able to navigate this treachery that I think we're going to be hitting here with the seasonal August, September, October period. Typically leads to some fun times for markets. So
Thanks for coming back.
definitely keep your head on a swivel. We'll do. Appreciate it, man. Take care.
Good night. All right, chat. Let's talk about hyperliquid and a few other charts. Any charts you guys want to see, just throw it out there. I am a technical trader at the end of the day, so I do love charting. This is something to me that is starting to get good attention, because there's lots of rumors that Trade XYZ may be considering a raise. And what would that mean for the hyperliquid Trade XYZ relationship? For those of you who don't know, or what Trade XYZ is, it's essentially a hyperliquid provider partner for some of the pairs that are trading on there. Most of their TradFi pairs come from Trade XYZ providers. So with that, I'm fond of hyperliquid here. What we saw from this initial move up from like the 47 to all-time high of 76 was a really inefficient impulse. Okay. And we're starting to fill that, what I would consider a gap. This isn't a traditional finance chart, so there isn't really a gap there, but I would call that impulse inefficient. That move, came with a bit too much brute force. And now we're seeing a revisiting of that, and we're just about 33% off the highs. It's not a bad spot to start buying hyperliquid again, which I have been doing, with the anticipation of some sort of clarity amongst the Trade XYZ headline, the rumors, whatever. I personally don't think Trade XYZ is securing a raise. I think they're gonna maintain the relationship they have with hyperliquid. If we look back at the July, August highs, right, we actually saw 3 attempts at this area, with one beautiful SFP right through it, back into 2 more attempts. This is a very, very interesting point of control. We've seen price interact at this level aggressively 5 times now, in both directions. So as we revisit it, for the fifth, sixth time. I'm going to anticipate a bounce. And so what I'll probably end up doing, I might put some leverage on this asset here and try to go for something like this. I wouldn't swing straight for new highs. I'd like to see more of this box get tampered with, let's say. And maybe that, leaves me with an average entry of like 50 flat. And the 50 psychological number is great for trading. Hey, Ponzi, longtime follower, saw your live link and just want to ask quick questions with cold card news. Do you cold storage? If so, what hardware and any steps to use extra secure? I do cold storage. I don't own much BTC cold storage right now. I ended up kind of selling a lot at the end of last year, beginning of this year. So I don't own much BTC on cold storage. I have been a long time user of Ledger, and this is not a shout out for sponsored purposes. This is just me saying it's a product I've used in the past, but unfortunately they've had their own problems. They've had database breaches, which have led to, wrench attacks and things that you don't really want to see, phishing attempts. But I guess I was clear of those for whatever reason. Trezor is also another hardware wallet that I think is more modern, up to date, probably keeping in touch with the sensitivities of the headlines. So look into Ledger, look into Trezor, but honestly, I really like brokerages. Obviously, I'm a huge Kraken user, and I keep a good amount of trading capital there. So, if you can't manage your own cold storage, I highly recommend using a broker. And in this case, obviously Kraken. Kraken is the best. So I will continue with that. Monty, will you take a look at Uni and Pump, please? I'm so glad you brought up Pump. Pump USDT is the best looking chart in crypto right now. That daily needs to clean itself up. For those of you who have been watching the show miraculously, you know what? I'm actually going to tweet this as well. I want people to come and see what I'm about to talk about because this is so important. Live now, drop me some tickers to chart. For those of you who have been coming to this show for weeks, months now, you'll know that Maine and I have been talking about lit. And I can't wait to show you the chart that I'm going to reference because let's see who has the most price action. I think it was in here because these are very, very, very interesting looking charts. Have a look at Lighter Coin. Okay, what do we see? We see aggressive sell-off, tapering sell-off, flattening price, higher lows. And now we get the other side of the trade, right? I am in the consideration that this is where Pump is right now in this moment, right around here somewhere, okay? Let's pull this chart up. Bada bing, bada boom, bada bing, bada boom. Is this the one? Sure, does this work? No, I guess let's go. Kraken, of course, we're going to use a Kraken chart here. And so what we'll do, just so that I can map it out, we'll isolate this. We'll take a look at it, right? This is one way to look at this. So let's go to the daily. Okay. Right. Let's start with the first phase, aggressive selling off. Okay. Then what do we have? We have some sort of a tapering off. And then we have finally what I'm going ahead and, go make the claim, an absolute bottom, right? Which we can call this point right here. And we start to see price on the up. Now, that doesn't mean that we're going to go straight to all-time highs, but it means the trend has reversed. So I would look for some EMAs to bid with the anticipation of price doing something like this, and then maybe something like this. This is my anticipation for Pump Fun. With that, I took a position on Pump. My average entry is it's like 19, 17, somewhere around there. But if we take a look at both of these assets, we can go ahead and say they look somewhat similar. And I'll even change this to a red so we can get exactly what we have over here. So you can really train your eyes to see what I'm seeing. Okay. This looks very similar in my opinion. That doesn't mean it has to continue from here, right? It could be somewhere in this stage. It could totally be somewhere in this stage right here, which would be kind of lame because I would round trip a significant amount of money on this long. But I'm in the camp that it's more likely somewhere around here because Pump Fund has been in the spotlight. They've launched a new product, the Pump mobile app, um, and it's cross-chain trading, and it's been, pretty successful and growing pretty aggressively. So I'm in the camp that we're actually here, and price should start to expand and do something like this. Okay, this is what I would like to see. Take a screenshot, quote me at me if I'm wrong. It's okay. I'll take my loss. I'll stop out. But if not, I think this is a very, very good return area. And just keep in mind, this is such a high beta asset. That doesn't mean top blast here. Because look at what these highs and lows can do from a percentage standpoint. That's a 28% pullback from here to here and then continuing on multiples higher. So keep your leverage low. It's really probably better to be a spot trade. But I really like that chart. Let me take a look at you wanted to see uni. All right, let's take a look at uni. I've seen a few people talking about uni. If for those of you who aren't crypto native and don't know what uni is, oh, look at these lines I have from like, oh my goodness, guys. I was trading this asset in 2019. Inverse heading. Actually, wow. Okay. This was one of my best trades, my first best trades ever. Not relative now, but this was like one of the first trades that made me multi six figures that I was so excited for. I remember this perfectly. I was in South America at the time. I was trading on a beach and I was reading a book called Reminiscences of a Stock Operator. And I was so in tune and in flow with the market dynamics at the time. And I took this on Binance. It was like my first real size levered long. And I ended up closing it around 9, I think. I got like a clean 2x with 10x leverage or something along the lines. And then traded it upwards. This was when Hasaka was the GOAT. Wow, what a time. What a time, guys. Oh, how the times have changed. Yeah, let me take a look at this uni chart from here. And let me get rid of all these drawings. Actually, I don't want to get rid of the drawings because goes to show you that we're trading back at those same prices from 2021. But um, you know, there's nothing here for me. You could say it's absolute low and it's starting to trend up again. I'm not positioned already, so I don't like positioning and stuff like this. Coins that have historical overhead and start to stairway up like this, the moment they break the trend line, it's very scary. And if the market's not trending, they get really aggressive sell-offs. So I just personally don't have, there's no trade at an entry from here because if BTC sells off from here, why would Uni continue to go up? Obviously, it's been trending since June 5th. It's 2x higher, but I don't know. Not a huge fan of that right there. Let's take a look at Zcash. Zcash has been one hell of a coin to trade. A lot more volatility than the rest of the market. So it's been good for trading. I just personally haven't. I took one trade right here. You can see this diagonal. This is my favorite trade setup of all time. It's the classic, as TraderMain likes to call it when I say it, the single line based analysis. This thing, it retraced the entire thing. I think I probably sold like right at these highs, so I didn't catch the whole thing. But this thing is traded very well in the sense that there's lots of volatility in both directions. So right now, we can go ahead and do it again, right? This is a lower time frame. You can say that's the single line based analysis. If I was the two areas I would look to target if I was in a trade. The first one, we're kind of already there, almost. The next one, I'd probably look for somewhere in here. Yeah, I'm not a fan of longing it here. If it pulls back any bit, I would try to long it like right into that area. Probably 478 with the stop just below this low here. This to me is not a bad setup. I wouldn't hit it at 488. from an investment standpoint, a multi month. I mean, if we had Bollinger Bands up, we'd see some coiling price action here, which means we're probably seeing higher volatility on a higher time frame sooner than later. In which direction? I don't know. Is Zcash really quantum resistant Bitcoin? This is what's gonna happen. We're gonna see condensed price action into up or down. And I'll just trade the extreme for either. But nothing for me at the moment here. What other charts would you guys like to see? If BTC dives to 50K, do you think charts like pump and uni hold up? No, that's a wonderful question. I do not like to hold any altcoins if BTC is going to be making new lows. You have to consider, I'll look at CRB in a second. You have to consider Bitcoin is the leader, right? It's the S&P, it's the NASDAQ, it's the indice, if we call it, the index of crypto. And if Bitcoin is selling off, it's not actually a basket of crypto tokens, but it's going to send the entire market lower. So, for example, if we see BTC taking out any of these most recent lows, um, honestly, below 62, I'm probably out of pump fund. That's the only crypto long I'm in. I'm in ETH right now, actually, as well. But I mean, I'm not gonna lie, these charts don't look good. Like this isn't an appetizing chart at all. There's just so many ways you can call it a break in market structure. This was like kind of trending. You know, if we get back below 1865 tomorrow and we're not holding and we don't close the day above it, I'll take an L on the ETH USDT trade and I'll have to reconsider this pump position because that's actually my entry. I think it's even higher. I think it's right there at 1910. Um, this is a momentum trade at its finest, and I'm a little oversized. I don't want to see it go below. I don't want to see it go below my entry. I might trim it if it approaches my entry. Um, but it all really comes back down to this guy right here, you know, and this price action has not been promising. This, in my opinion, will make a lower high. If we invert this chart, it probably looks great. I forgot how to invert it. Anybody remember how to invert it? I think you like double tap here, invert scale. This looks great. Oh, that's an ugly chart, guys. I'm not even gonna fucking lie. Like I would long this. Oh man, I gotta tweet this. That's a really bad looking chart. It's a really bad looking chart. Higher lows. I just tweeted it. Go interact. If you don't follow me on Twitter, it's Ponzi Trader Buyer of Ponzi. I'll come to CRV in a second. Let me just answer these questions before I go back to the chart. When you do single line based analysis, do you play the first breakout or the retrace back into line for entering? That is such a good question. Such a good question because I've been trapped doing one or the other. And so honestly, this is inverted Bitcoin, but we can use this as an example, right? Say this is the single line based analysis, and we're trading a lower time frame. We're trading the 4 hour. Let's call it here. Let's go to the 4 hour. Here's how I normally play it. Okay. I want at least 3 touches, really. So this is like really not the best example for it, but the best part is normally trying to catch what I would call this flattened bottom. Okay. And what that looks like is instead of price, so, I could have attempted here, been stopped out, but as price starts to make these flattened bottoms, higher lows, I'll put my first 25% of the position on in this move with anticipation of momentum. Okay. If I see the momentum coming from it, then what I'll do is I'll chase that momentum upwards. Maybe I'll add the other 50% of the position, 75% of the position to get that full size. And then I'll take my stop loss and I'll set it, at this point, my average is probably up here. Oh, wow, this is upside down because the whole chart's upside down. We're looking at Bitcoin inverted, so this is just funny to do. Um, But it shows you that price action can be traded in both directions. And if you're bad at shorting, sometimes you just have to invert the chart. I'm not even kidding. That sounds insane, but if you invert the chart and you treat it as longing, just make sure you actually pair it with the shorting button. But say our position starts here, I start to chase that position upwards. And it gets to a point where I'm like, okay, my average entry is just above that single line based analysis. It's a made up name for the style of trading that I take. And then I'll take that invalidation and I'll drop it below these lows because theoretically, we shouldn't revisit this or this single line based analysis trade is dead, right? Um, and then I'll just watch price action. I'll watch the books, I'll watch the headlines, pair it all together. And then this is that single line based analysis. And it's important that you zoom out on structure because this is the lower time frame trade. But this type of trading can be done at most time frames. Oh, I should probably reinvert Bitcoin. Boom. And that's single line based analysis to the downside, right? And the easiest way to think about this is you can think about it as a momentum fade in either direction. So all I did was flip the chart. So right now we're looking at this from the other perspective. BTC has all this momentum and it's trading. And another way you can actually look at this is using an EMA. We'll use like a daily maybe, right? It's a little sloppier, but below this EMA you get confirmation and then it's downside. But I don't like to really do that as much as I like to just look at price and say, oh, let's do this and say we we targeted the highs. We couldn't get a new high. We broke through this trend, and that is grounds for shorting and adding, right? So, and it's the same way. If I invert the scale, it works to the upside, it works to the downside. This is an important tool to use inverting the scale to help reset your brain. If you're a permanent bull, if you're a permanent bear, you take one or the other, then try this, give this a try, and then reapproach. Say you want to start with a new asset. And I guess I can do this right now because I'm long ETH and I am being, oh yeah, this is actually probably the perfect example. I'm being stubborn. Okay. I'm being stubborn with this chart because in theory, you can say that momentum has faded, right? It's been failing at all of these highs. And now what we're seeing is a sign I shouldn't be long, but what we're seeing is probably a lower high. And then we're probably going to see something like this, in my opinion. And if this is my opinion, I should not be long ETH. So I'm honestly going to consider closing some of this position before bed and reevaluating it in the morning. And if I was shorting it, then I would put my invalidation right above these highs. And I would target something like this. Unfortunately, I am quite literally in the opposite of this trade. So now I have to actually reconsider it because these are failed highs. And all this is setting up for is one big lower high. Oh man. I think I'm going to close my long. I think I'm going to close my long while I have a chance. I would be glad to long ETH again above this 1930 area. Wow. Wow. This looks like a short entry. Yeah, it does end with, it does. I think they should use NinjaTrader for their analysis on NinjaTrader's channel. That is right. We're also on Kraken's channel. Let me go back to ETHUSD Kraken. Shout out NinjaTrader and Kraken. I actually do trade NinjaTrader futures, ES and Q, but today we're talking about crypto. So let's go back to this Kraken chart. And this is another exercise for traders, right? If you have too much analysis paralysis, go back to a clean chart, wipe it, start fresh, cover the name, have a friend cover the name for you so that you don't know what you're looking at, and then make that objective decision and say, what does this chart look like to you? And I'm going to say the same exact thing. Attempt at the high, SFP, lower high, which probably means, something like this. It's next, right? This wouldn't surprise me as a price action trader. This is stalled momentum to the upside. This is single line based analysis that I was showing you elsewhere. This, and if I was to long it, let's go invert the scale. Oh, I need to close some of my long here while I'm still like somewhat not super down. Here, let's go ahead. I'm gonna do this really quick while we're on stream. Um, yeah, let's. So can you guys picture the exercise I did there? I was actually long ETH, right? So I was long Ethereum, and now I've inverted the chart. I've used my single line based analysis to give myself the other side of the trade, and that doesn't mean that I have to take the short. It just means that I have to reconsider the long that I'm in. And I'll probably trim half here. I'll set price alerts. So if price goes below the 1820, 1830 level or back above 1905, I will gladly long Ethereum, more Ethereum back above 1920. But this is looking like a lower high to me. And this is part of being a trader. It's taking, both sides with rationale. I'm naturally biased towards the upside. Okay. I like to trade towards the upside. So I take more longs than I do shorts. So when I put myself in a position like this, I'm not going to just naked reverse the position. I'll probably just reassess it. I'd rather short it somewhere around 1850 tomorrow if that's what equities are doing. And since I'm somewhat bearish equities, it's part of the confluence of the trade. I don't think ES looks any good, right? I don't think this is the sexiest chart. I think this is I'm probably going to go short. I like shorting equities more than I like shorting crypto for some reason, even though that makes no sense. I'm better at it. And I'll show you guys my futures account. If you follow me on Twitter, you've actually seen my P&L from my futures account, the equity curve. Wait, let me just close some of this position really quick. Yeah, I round trip the boat on pump. I should probably consider closing some pump as well. You know, it is what it is. Anyways, I'm probably going to bet that this is a lower high. Oh, why can't I draw right now? This is a lower high, and this would probably do something like this. Lower. All right, sorry, let's look at other charts. How do you use AGGR? It's a very good question. It's in a wonderful tool that I love. It's an aggregator, and that's why it's quite literally called AGGR, an aggregator of exchanges. So this is a no template AGGR, okay? You get the time frame up here, you get these indicators, right? Cumulative volume delta, which is called CVD. You get liquidations, price, volume, yada, yada, yada. And then the markets, the exchanges are all here, okay? Or not all of them, but relevant ones. I got to add Kraken on here. I don't know why Kraken's not on here. It is on my other template. This is the default template. The best way to use this is, in theory, order flow. But it's kind of prettier than it looks. And the way I like to trade this is with trying to find either trap traders in either direction or just kind of understanding like the general direction of the market. My favorite tool, quite literally, is this little feature down here is the audio. Okay. I have this set to 0.04 and you can play with the audio settings. In my other template, it's much better. But that's because if I'm tabbed out, right, and all of a sudden I hear big pings, the pings are quite literally orders being, there you go. You hear that? So you come over, that's a $1.1 million BTC order, market. It's nothing crazy, but it shows you, or it reminds you to, hey, like check back in on price. Now this is Bybit right here. This is probably the same trader. Maybe that's a $2 million position, whatever. That's how I normally use AGGR, but in this setting, it's more of just like a background stimming, but at the same time keeping track of price without looking at price. It's an audible price trigger. Let me go back to that CRV chart. Somebody wanted to see CRV. Yeah, guys, this doesn't do it for me. Somewhere around here, the founder of CRV took him an 8-figure loan, a 9-figure loan against his CRV position to buy a $50 million mansion in Australia. And now you can see what price has done. But that's not to say that price doesn't look like it's at least flattening. But this is, as we said earlier, there's my flat line. As we said earlier, oh no, this looks bad. I'm not gonna lie. To me, this is my opinion, low, 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 and it's like starting to like fall, which makes me think we're gonna get momentum to the lower side. Let's go ahead and invert the chart, right? Add that to your mental exercise. How does that look to you? Looks like we're gonna go closer to this white line. This is what it looks like it's doing to me. Inverting the chart is such a good mental exercise for eliminating bias. I think it's gonna accelerate towards that white line. Price looks like it's going to gravitate towards this liquidity, which is, in other words, down. That's a good exercise for you guys to jot down. Try that. Invert your charts. Ponzi is a ping sound. Ponzi is a ping sound. I'll never forget. And when I first started using AGGR, I was so excited to see big trades. And I think in like 2020 or 2021, I put on like a multi-million-dollar perps position on BTC on Bybit. And I heard the ping and I was like, oh my God, someone just entered this position right after me. Maybe I'm right. And then I like look at it and I'm like, oh my God, that was me. I'm the whale that I've been looking for this entire time. And it was like the first realization that like, wow, sometimes that whale is just another degenerate putting on a position with not much of a thesis. So don't just blindly chase whales in this scenario. Um, a pretty silly like realization, but that you look at those positions you're like, wow, he must know something. And then you're that guy. River wants to see Eigen. What's up, River? Dude, what happened? Eigen was trending not too long ago. Looks not so great. See, this is what I was talking about. What asset were we talking about? These higher beta assets, like with a lot of overhead. First off, insane vol, right? We're looking at probably 30-40% swings in both directions. Oh, 100% swings. Nice. Um, Probably, it's the better spot to take a trade. I mean, to take a long on it. But like, dude, there's just other assets I would rather try to trade right now. It's not the worst spot to take a long if you're going to try. It doesn't really deviate. It's deviated twice below this area. But if I'm if I'm bearish BTC, it's not the worst place actually. Probably one of the better. This is what I would look to trade. A move back into this area, which is like a pretty high vol move. You can capture a lot there. It's just, I don't know. I'm really upset about this ETH USDT pairing now. It looks so bad. But the reason I was somewhat bullish on ETH was because the BTC pair doesn't look bad. Single line based analysis guy. Kind of harder to trade this, but it's just another piece of confluence to look back at. It's like, are we going to make this low again? Or is this a higher low? Absolute low, higher low, higher low moving forward, right? That's what I want to see for the year of 2028. I want it to be an ETH year. I want to see something like this. Something like that. It's ETH season. We've been suffering for too long as ETH enjoyers. Probably gonna get called crazy for that. What other charts, if anybody wants to see any other assets? If not, so this is actually another good exercise. This list is dated. I have it labeled as the list to watch at the moment, but it's actually dated. I made this list sometime last year. So this is an exercise I used to do a lot when I was like really an analyst trading. Right now, I'm not as aggressive of as a trader. This doesn't look too bad, but I'll pick a time frame, right? Maybe the 4 hour, maybe the daily, and I'll just go through the charts like this. Okay, here's an example. Why is Cardano ripping? Why is Cardano up 8%? Daily looks awful. I actually don't hate this chart, and I hate Cardano. Hard to trade, but sure, Arbitrum had a nice pump off the lows because of Robinhood, but the team is just unlocking infinitely. And then I'll just do this. We'll just scroll. I don't hate the BTC chart. I don't like it. I'm not a hater per se. I'm just not an enjoyer. Like this could be a single line based analysis scenario where flattening bottom, price does something like this. I will long here if we get that, like 64, above 64. And that's when I would re-put on the ETH long. So I'll just sit here and I'll scroll. Athena is still looking so strong. I was accumulating an Athena position through here. I closed it somewhere here, and now it's back above that area. This tells me it's probably going to trade up, but it's just high vol. But it's strong for some reason, and I don't know what. There may have been a headline. Yeah, there's nothing that really catches my eye. Oh, it's probably a point to consider what light does next. This was the move from the Robinhood announcement that they were the partner for perps. This is those same people probably taking profit. This is starting to look like a momentum. Momentum is starting to die, um, and flatten off. You know, I wouldn't be surprised to see some distro, or it could look like something like this right there. Who knows? It's just kind of like an area of do nothing, right? The smartest people I know take 2 to 3 trades a year. Do you do pre-trade checklists to check confluences to stay in logical state? For example, BTC trending? Yes. Um, Super important, bro. You want to just like make sure you're not jumping the gun, which I tend to do often. I get excited. River wants to see SpaceX. I'm terrified. I actually get my shares, I think, on the 5th. Ugh. This was the greatest retail liquidity event of all time, bro. There are people who bought this at 225 and they're down 50%. I don't want to even rant, dude. I don't even want to rant, but like in hindsight, this was so obvious. What is my investment worth now? I think I'm up 3x, 2x. Yeah, I don't know. I mean, dude, this was literally like the biggest signal of all time. They were like lowering minimums for people to put on positions, expanding the IPO for retail. Do USDT dot dominance. All right. This is the main special. Is this USDT dominance? Yeah, it is. Yeah. So what does that become a short circle trade? Whoa. Yeah, I mean Tether is like one of the most profitable businesses in the world. So that doesn't surprise me. I was in a Jenny short but got stopped when it went above Amazon. Dude, Amazon's kind of on its tear. Look, this looks pretty good. There's an Oracle trade that a few of my friends are chatting about. All the AI CapEx somehow reverts back into Oracle revenue. What's the thesis there? I don't know. AI boom drives tech earnings as Apple, Amazon lead markets, blah, 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 blah. Yeah, there's a trade here. I'm just not in tune for it, but nonetheless, I think this is probably a valuable place to buy Oracle. Could probably get an easy move to like 190, 180. I'm gonna get it listed on NATO. I'll ask the team to put that on NATO. Oh man. We got 3 minutes left here. So I ended up seeing today that NATO coins traded on an OTC channel. We don't know if actually, let me look for confirmation now. We don't know if that OTC channel was real or not. Um, let's see if anybody has announced it. XBTO is supposedly the platform that handled the OTC for NATO points, but it may be a phishing OTC, totally fake. Nonetheless, my anticipation for NATO points and conviction has been maximum. I've been trading solely, not solely, but mostly on NATO for the last 8 months. So I can't wait to do my victory laps. Of course, Karina. And no, I actually won't do victory laps. I won't. Um, Before we log off here, here's the last of this plan that I'll mention. ETH. So I'm not short right now. I was actually long, but we'll just use the Kraken chart and we'll wipe it. ETH above 1910. I'm long and strong. ETH below 1860. I'm concerned. Probably going to short. I'll use the momentum short. I will cope short equities when I should probably short ETH. But that's my vision for the week. It's my plan for the week. Same with PTC. I don't want to see. I'd like to see something like this. No lower than 62.6 for the start of the week. Ooh. No lower than 62.6 for the start of the week. I'd like to see 65 in the cards. I will long anything above 63.8 for the day or for the week. But below 62.8, we're in trouble. We're in trouble. And they start ripping it as I start chatting. Guys, thanks for coming to another episode of the Crypto Closeout. I'll be back next Sunday with Trader Main and maybe a special guest. I won't announce it yet. We'll have to find out. Have a wonderful evening, everybody.